what you do with your money is just as important, if not more important, than how you go about chasing the money.
Kim, welcome to the Ultrahabits podcast. As usual, with most of the interviews, we have technical issues, but we've made it. So we've landed here safe and sound. Glad to have you on the show,
Thank you very much. Thank you for having me on. It's fantastic to be
here. Yeah, thanks, Kim. So you're in Melbourne now, but you don't live here, do you?
No, correct. I've actually been living over in Papua New Guinea for the last couple of years and have just got back to Melbourne. Just spending a couple of days in Melbourne, seeing mum and dad, a few friends, and then heading over to Thailand tomorrow for 3 weeks or so.
What are you doing in Papua New Guinea? It's like not a place that when you ask someone, I live in Papua New Guinea, like that can't be that random. What are you doing over there?
So I've actually finished the job over there now, but I was working on economic development programs. So, everything to do with kind of helping the development of the country in the economic space. There's a lot of challenges over there. It's a developing country for sure, but it's a beautiful country and it's got a lot of potential. So I was helping out with some of the programs there to help build up the economics capacity of the country.
Right. So when you talk about developing the economic capacity, are you working with the government?
Exactly. Yeah, exactly right. So it's working with government, it's working with business, it's working with other people in the country, civil society, etc., trying to help them build up the kind of technical expertise needed to put the country onto a sustainable path. It's going to take a little while, but there's a lot of work to be done, and there's real potential in that country. It's a fantastic place.
Right. So obviously Australia has interest in its local partners and helping them develop competency and capabilities. Therefore, the trade is strong, and if our partners are strong, we're strong.
That's exactly right. If they're strong, we can do more business with them. We can trade more, and you want to see strong neighbours and strong countries that are close to us, and more travel and business and trade between the two of us.
Yeah, so you're I looked at your background, like you're a bit of a mover and shaker. So you've also got what is it, a non-alcoholic, or is there's alcohol in this beer? You're an importer, distributor, beverage maker. Like what's going on there? Give us the rundown on that.
Yeah, so a few years ago, it was over in the Netherlands, and we were looking around, and I don't drink so much these days, and we'd always go out to the restaurants, to the bars, and in Australia, I'd be looking around and I'd say, I don't want to have an alcoholic drink. What are my options? Basically, I'd have like Coke, Sprite, sort of soft drink. I don't really like that. Or I can sit there drinking water. And over in the Netherlands a few years ago, we looked around and every single restaurant and bar had 3 or 4 just like great non-alcoholic beers or wines, just really good options. And, so we just went up to one of the breweries who makes the beer, and we said, can we buy your beer and import it to Australia? They said, yeah, sure, of course you can. Like, no worries. So we brought it over. The first shipment came and sat in our lounge room, in fact. So we had several pallets of beer just in the lounge room, and we started going around Canberra and trying to sell the beer. And eventually it started to take off, and now we've got a whole bunch of different breweries on board that we work with, and obviously in that time it's gone from being quite an obscure product to a much more of a mainstream product now, and you're starting to kind of see great options in all the restaurants and bars around Australia, which is really cool to see, and great for me. Now I can go to the restaurants, bars, and get a great non-alcoholic beer instead of having to sit there with a Coke or a Sprite.
So, I mean, it's a great model. So you kind of developed a portfolio of non-alcoholic beers, and I think trends are moving towards a healthier way of operating, and you would have probably been right at that upward curve of the take of non-alcoholic beverages. Like, have you guys gone super hard, or you kind of have let it grow organically?
Yeah, I mean, it's been much more organic, I'd say. I mean, everyone's going hard at it. Thing is, with a trend like this, you can't actually go ahead of the trend, ahead of the curve. You have to kind of go with the curve, So if you go as a business, if you go too hard, beyond the curve, what's going to happen is you'll be overstocked, and you'll put too much into it, and the returns won't be there early on. So it's really one of those kind of trend businesses. And with trend businesses, you have to be pushing the curve, but you can't go too far beyond the curve. So that's what we're trying to do. Is just build the overall market. I mean, the overall market for non-alcoholic beer is still, I think it's around 1% of the total beer market. So it's very, very sort of small still. But up in the Netherlands, I think it's up around, I think they say 5 to 7%, 5 to 8%. So there's a lot of growth still possible here in Australia. And that's where we want to be. We want to be where the growth is at.
I think the challenge with non-alcoholic beer is you've got the domain of alcoholic beverages not wanting to cannibalize that, and therefore they're not going to be investing in marketing and massive campaigns. So you got the smaller guys like you that are really coming up against what is a big alcohol consuming culture here, and you don't have the marketing budgets. And it requires also such a fundamental change in regards to how we view our health. So you got all these dynamics at play. I think the only play would be a big provider with massive marketing budget coming in here that wasn't affiliated with any alcoholic beverage, that was really interested in pure disruption and chaos, right? Like let's get everyone on non-alcoholic beverage. We're not worried about cannibalizing any of our alcohol revenue because they won't have any, right? But I think that's going to not probably happen. So anyway, but look, moving on. So, I mean, you've got a mixture of government background, working macro, microeconomics. You've got your own entrepreneurial journey. And now you've come to this place, and that's kind of why I wanted you on the show, where you uncovered a need around educating millennials around money and I guess working hard, but working smarter. And I do agree with you that it is becoming increasingly difficult for Australian young people to have a piece of the pie because of the escalating cost base. And I suppose the first question is, how did you decide to focus on this area?
It's a good question. It's the one I always get asked. As you know, so I've got an entrepreneurial background. I actually founded a website about 10 years ago as well, and I sold that recently. And so the beer importing business is kind of my second sort of side business that I've been running. But if there's one thing I've learned over the last 10 to 12 years running these businesses, is that they are really hard. Really, really tough. Like there are absolutely no guarantees with these businesses. Every day it's just a battle, and there's just hits from all directions. So I wanted to write this book because, I feel like the message that we often get is that to move ahead, to get wealthy, what you need to do is chase more and more income. You just need to chase more income, and we do that in various different ways. So, some of us go out and start side hustles, and some of us get onto the corporate path, the career path, and we, hustle as hard as we can to try and move up that corporate ladder, get that next promotion. We're always kind of hustling, trying to move ahead, trying to chase more income. And I said, that's great, but if you don't know what to do with your money, you will never get ahead. You can chase income as much as you possibly can, but if you don't use it well and you don't convert it to wealth, then you'll never actually move ahead. So I wanted to kind of, I wanted to write a book that addresses this and demonstrates to the extent possible that what you do with your money is just as important, if not more important, than how you go about chasing the money. And so that's really the core of the book. So I was looking at what kind of books are out there, and you've really got, you've got your get rich quick type books. And you've got your sort of basic financing books, basic personal finance books. And, I didn't want to write something in that space. And then you've got the books that are kind of like, say, The Barefoot Investor, which provide this sort of really good advice. But what, I said, what if you're sort of a little bit beyond that? You don't just need the basic bucket plan that's outlined in that book. As good as that advice is, what if you want to go kind of to the next level and get that next level of insight? And there's nothing out there that I could see on the market, so I decided to write it. I decided to write it.
Hmm. Do you think that the millennial dream has changed in terms of, so the Australian dream in the context of the millennial? Do you think that's changed, and do you think that millennials are clear or less clear than the forefathers
Yeah, yeah.
on what that dream looked
It's
like?
it's.
I
I
guess.
mean, it's really it's really the topic that we're all concerned with at the moment. Is, how are we as millennials going to move ahead in our lives compared to, say, our parents, when we look back and they had what looks like, free education, cheap housing, and access to really great jobs, and a clear path that was laid out for them. How are we going to, in our own lives, like, move ahead and make our own way? And the fact is, things have changed since our parents were the boomer generation, were sort of growing up and building their own lives. Housing is more expensive now. There's no doubt about it, and cost of living is going up. But having said that, there are certain things that we have access to as millennials that our parents didn't have access to. There are some kind of financial advantages that we can take advantage, that we can use, that weren't available back in their day. A couple of examples are our our access to investing on the stock market. Back in the sort of 80s, 70s, and 80s, if you wanted to invest in the stock market, you had to go to a stockbroker. You had to, you know, pay really expensive fees. There were often minimum amounts to invest in. You had to pick single companies, as opposed to today, where you can, with the touch of your phone, you can go on through one of the share trading apps and you can buy these funds, broad-based funds, which give you access to, entire index and, for example, top 200 companies in Australia. You can do that at a touch of the button. Minimum investing amounts are so much less, and technology has kind of really changed the investing environment. So that's sort of one example. The second is with our superannuation structure. This is a huge advantage for people who are younger these days. Back sort of 70s and 80s, superannuation was tied to companies. So if you left the job, you often just got a payout. And I think the stat was in the late 80s, only 50% of people even had superannuation here. So it all changed in the early 90s with the superannuation guarantee. And now all workers are guaranteed 10.5%, going up to 12.5%. Plus, if you start salary sacrificing a little bit extra, you get all these tax breaks. And it's a really incredible vehicle for driving your own wealth. So, there are things that we have access to that they did not have access to. And I guess my point is, every generation has its challenges, and we certainly have our challenges with that, with housing and cost of living, access to jobs, etc. But we do also have some differences and some advantages that we can take advantage, that we can use.
Yeah. My wife and I are actually meeting with our accountant and their team this week to look at superannuation, because I have the view it's been sitting there kind of not
Mm.
working for me well, and I've kind of handed it to one of these funds, and you don't really know what's happening, right? And I think it's very easy to bury your head in the sand because I'm not a financial person, and
Yeah,
financial things suck for me, right? But I think that, to your point, like, I've always thrown
yeah,
energy at everything. That's
yeah.
how I've created wealth, right? Like, I've thrown a maximum amount of effort in a few different things, and that's paid off. But as I get older, particularly I'm
Mm.
41 now, it's like, okay, well, how can I start to pull other levers, that are more scalable and less dependent on my
Yeah.
energy. And do you think that millennials, I know that in some ways, you have the traditional archetype of the millennial that's, jack of all trades. They've got their hands in different pies and they're quite savvy, and they're doing a bit of crypto, doing a bit of
Mm.
trading. And I've come across these millennials that are what I think a bit of
Yep.
an anomaly. The kind of
Yeah.
cool nerds that kind of knew stuff and started to do stuff and have created wealth. But do you think in general they're, because my feeling is maybe not with millennials, but kind of the generation coming up behind millennials, there's a bit of an
Mm.
apathy about, and I don't know if that's just me as an older person looking at young people, and that's just the way it's always been with older people looking at young people. But I feel there seems to be a bit of ambivalence around this kind of topic, and maybe a lack of care factor. Am I right or wrong in terms of what you've
No,
found?
I think you're right. There's always. I mean, there obviously is like, and I was the same. Early 20s, you kind of with money, you sort of whatever. I'll think about it later. That's an older me problem. And then suddenly you wake up and you're 41, I'm 38. Like you're like, oh, what?
Yeah.
So that's always been. I mean, that's always been part of it. But there is definitely a sentiment that people throw their hands up and they say, "Oh, it's all getting too hard. I'm going to just tap out." And that's what you've got with this, with some of these sort of movements that you see. I'm just going to tap out. It's impossible. I'm not going to even try. But the thing that always kind of struck me is that we're all of us are so focused on money and either not having enough or moving ahead, but so few of us actually take the proper time to sit down and read about it and learn up on it, and we do just kind of let things slide for years and years and years. I mean, superannuations is a perfect example of that. How many people just don't know what's happening? You've got this fund that's taking 10.5% of your money every month or whenever your paycheck comes in. They've got it, and people don't even check it. They don't know what's going on with it. They don't bother checking in the fees. They're just. I just find it kind of extraordinary, actually, that on the one hand we're so focused on it, and on the other hand we're just happy to be completely apathetic and not do anything about it. So this is why financial literacy is really so important for the millennial generation and those after.
Yeah, mate. Look, I think people will tend to focus on where they feel a sense of control. I remember prior to you know uh, this iteration of myself, I come out of the
Mm.
logistics industry, right? And we'd have customers that would troll through their freight and logistics bill, and they'd complain about the variance in fuel
Mm.
surcharge, like which was 0.5% here and there, because it was explicit, but they're not looking at the
Yeah,
fluctuation in their
yeah, yeah,
rates because it's
yeah.
too complex. So what I'm going to do is I'm going to look at the
Yes,
one
yeah,
thing that I can
yeah.
understand, but that's the low ticket item, right? And I think, particularly with these financial institutions, they're clever, right? Like, if you think about when you switch, I recently
Mm.
moved
Mm.
mortgages. Yeah. So one bank that I ended up going with had a slightly um,
Mm.
better offering, but the other bank uh, had this massive
Yeah,
cash back, right? Like, so they're going to give you upfront cash to switch to them for the mortgage, right? Like, $3,000 or $4,000. But when you actually look at it, the other option
yeah.
was better. But these banks know that most young people in particular, or most
Mm.
people, are going to be like, "Oh, that $3,000. Let me throw you at that. Let me get your
Yep,
focus
yep,
there. Then we're going to hammer you on the
yep,
back end,"
yep,
right?
yep.
And so I think, and most of us will just take that option because it's too complex and we don't feel comfortable operating in things we don't know. That's the main thing. I think that's the challenge with financials, is that a lot of people don't want to look at it, because if I don't look at it, I don't have to open up that closet, which is a mess, and start to
Yeah, it's so
organize,
true. I mean,
right?
Ajay, I think you've actually just hit the nail on the head there. It's absolutely spot on. Like, the way, I mean, you can focus on the smallest thing that doesn't make a skerrick of difference, and the big things are going on in the background, and you just completely ignore them. It's amazing. Yeah, on your point about the banks,
Yeah.
the the most people in Australia will end up going with one of the major banks for their mortgages. I think of the total. Last time I checked, it was the total home loan market is worth about 2 trillion, of which the major four take up about 1.87 trillion of that. I think last time I checked. So it's just an overwhelming amount that go with the big banks, and why? Because they know the big banks. They've grown up with the big banks. They're familiar with the branding. But which allows the bigger banks to kind of charge these higher rates. When if you just take a little bit of time and look into it, you can really find some good deals out there. Particularly with, I mean, home loans are just huge because of the amount you pay over the life of the loan, and they know that, so they can give you all these kind of add-ons and products to get you in, knowing that over the life of the loan they're going to make much more from you. A good example at the moment is how everyone is. A lot of people are moving from fixed rates onto variable rates throughout the year, and I recently did myself as well. And they put me onto the highest rate that they had, and I looked online, and they're offering 2% less to new customers.
Loyalty tax, mate.
Crazy. And
Loyalty
then I called
tax.
them and
You get
I said, what's going on here? Like, you're giving 2% better to these new customers. And I said, what can you do? And they went back and sort of, this is what we do. This is how you get rolled over. And I said, well, can't you just give me what the new customers get? And they went back, they were like, yeah, okay, sure, we can do that. It's like a 10-minute phone call, but they just rely on people not taking the initiative.
I think, and I'm a person that pushes back on everything, but like even I was like, surely you can't push back on your bank, right? Like, and then I was talking to my friend, he's like, dude, you can. Like, I think they depend on the severe, like the bank, serious institution. You can't just call them up and be like, hey, but yeah, you can. And I think that a lot of people cop it. And to me, banks are like mortgage loans are commodity, and all that marketing around the support just pisses me off. Like, these fluffy marketing ads, like they're supporting you in your dreams. No, they're not, dude. It's a commodity, right? Like, they'll take that house from you if you can't make your payments, dude. Don't worry about that, right? Like, so, what's your view? We're just talking about, working hard. We still have to work, right? We have to put in the work, but we also, I think, need to be smart on how we manage that income, because as you pointed out, like our income isn't always scalable. It is where it is sometimes. Not everyone works in jobs that have scalable opportunity in the form of bonuses or options or whatever. So I think working hard is still, important. And recently, and I did some kind of, stuff on social media about this and commentary about my opinion, but what's your view on the proposed kind of 4-day work week? Like, how do you think that ties into, like for me, I think if you can, the productive and people that are optimizing will find ways, whether it's 3, 4, 5, 6, 7 days. But I think I have some challenges with kind of lowering the bar, because I think it will be, you can always lower the bar, right? Like, but in terms of where you sit, what's your view on that? Or do you not have one?
It's very, very interesting question. 4-day work week and how that will kind of like fit into how we run businesses and how we run society, right? I think it depends from what perspective you're coming from. So if you're coming from the business owner perspective, what you want is you just want you want the output from that person, and does it matter if they're doing it over a 15-hour day or they're doing it over a 7-hour day? What you want is the output and the outcomes, and that's really what you just focus on. And so if a 4-day work week is actually going to help people work more quickly because they because they have enough time to get away and sort of recharge and think, then fantastic. But I think it's going to have to be. It's hard to sort of dictate it across across the whole society and say, this is what we're going to do. Because it really has to be a bit of a case by case. But, from the business owner perspective, you just want the output. Like, it doesn't matter how it happens, just make it happen. From the employee side of things, clearly, like, that's great. If you can, I think it is kind of a recognized fact that a lot of employee time across many businesses around Australia, a lot of it is often sort of just FaceTime. They're just there to make sure they make up the hours. So if they can condense that into a 4-day week, that actually kind of optimizes their time as well, potentially, if it's done properly. So that giving them a little bit more time as well. So it's kind of you could see it as an optimization of time, because simply just being at work doesn't mean you are working. So I guess that's what I'm always focused on. It's like, what's the output?
Yeah, and I think, like, right now I work with a contracting, and the CEO is a great guy, and he always talks about Parkinson's law, right? Like, people will do the work in the time that they're allotted. And my view is that, like, people will I don't believe environments can optimize people in many ways. I think people will optimize themselves. And so my concern would be that what we're doing, and particularly in how it relates to millennials, is we're continuing to soften the work environment. And, how does that look for our young people coming into a 4-day work week when the rest of the world is competitive and they're productive and they're a bit more switched on? And, this was all about mental health initiative and productivity. I'm all about that. But the view for me is about strengthening, and how do we strengthen the individual through things like what you're talking about, your education, right? Like how you're educating millennials to say, okay, well, look, you've got a finite amount of time, finite amount of energy. How do we scale your energy in terms of the return on energy, really, and return on your money, versus looking at ways at kind of softening the playing field, which I don't think will serve us as a society well necessarily moving forward. But yeah, look, it's an interesting one, and one that I'm paying attention to. So I wanted to talk a little bit about the millennials and moving into the future, right? So we are increasingly seeing millennials not being interested in buying homes. We're seeing new business models being set up around rent to buy. I think you can kind of, there's new models where you can effectively rent something and have it customized to your liking, because, developers have realized not everyone wants to buy. Do you see in the future, like we fast forward, let's say 20 years, do you see most millennials owning homes? Do you think that a lot of that, like, I reflect upon it and I see a lot of the millennials that go into trades and aren't kind of necessarily conscious about how they're managing their money, but they did have parents that were professionals that might leave them homes. Like, what do you think the landscape will look like in 20 years? Just fast forward.
It's a great question. You've got a few different models around the world. You've got places where there are strong protections for tenants, and you can have tenancy for life, and that happens in some places in Europe. For example, Germany has quite strong tenancy protections. So it's possible that we would move sort of more in that direction, which would make tenancy for life much more feasible in Australia, and give you the kind of necessary protections that you can't just be thrown out of your house, that you're renting, with 4 weeks notice. But the thing, and I've heard people say this, that they're not going to bother trying to buy a house, they're just going to do something else because it's too hard. And what I say in response is, that's a very risky strategy. That's an extremely risky strategy, because we may move towards a model where there are stronger tenancy protections, such as they have in Germany, or in other places in Europe, but we may not. That's a political question. We're going to have to vote on these questions over our lives, but who knows what's going to happen? As it stands, the current tenancy protections are not that strong. So you can, and it's fine when you're young, but when you're old, you don't want to be in a situation where you can get kicked out of your house with a few weeks' notice because the landlord wants to kick you out, or because they want to sell, or something else happens. That's not financial security. You want to be in a situation where you have a place to live that's yours, that you can't be kicked out of. So it's an extremely risky strategy, in my view, to not try and buy a place, given the current laws and regulations as they stand. They might change, but they may well not. So I think it's a very wise strategy to try and buy something to live that is yours, a roof over your head. It doesn't have to be like fancy. It doesn't have to be big. It just has to be yours. And when it comes to personal finances, you have to take things as they are, not things as you hope they will be. That's how you give yourself financial security. So, the core of that point is things may not change, and they may change. You just don't know. We can't know what's going to happen with tenancy protections down the track, but you can take the steps that are kind of prudent today. In terms of like broader home ownership, it's undoubtedly it's becoming more difficult. It really, really is. It's more expensive. There's more demand, and there's just not enough houses in the places that people live. So it's probably going to stay difficult, unfortunately, and that's a real challenge that we have as a society to kind of fix access to housing.
It may also drive younger people to stay at home or go into shared accommodation and push them down an entrepreneurial route. Right? Like if you think about it, right? Like instead of going and buying a house, like, you got a whole Gary V generation too, right? Like, people are like, you know what, I'm going to hustle on the side. And it might create actually more entrepreneurs that drive, greater wealth at the end, right? Like,
yeah. I mean, it's certainly possible. But as I said earlier, I mean, there's no guarantees with entrepreneurship. There really isn't. So you've got to do the things that you can as well to give yourself as much financial security as possible while you're doing that and going out and trying to create wealth and hustle. Yeah.
Well, we're going to start to land this plane, Kim, but we've always got one question around habits. Yeah. So if you were to kind of give our audience a good habit or a good, habit or two particular to financial, realm, what would that be?
I think it goes back to what we were talking about earlier, and it's just taking some control. It's getting into the habit of checking, your credit card statement when it comes in. It's getting into the habit of checking what's happening, with changes to your super and changes to your health insurance. When they send those emails through, phone companies, I can't even tell you the amount of times I've had to call up the phone company because they've stuffed up my bill. It's really this, the habit is just actively managing your finances, because it's so easy to just let it slip and not worry about it and think it's a problem for later you. So it's that would be the one habit I think is to take control of your own money, because it's your money. It's not theirs. They're the ones who are just trying to take it off you. So if you don't manage your money, someone else is going to come in and manage it for you. So that's my one sort of financial habit.
That's brilliant. That's brilliant. And Kim, where can our audience learn more about you and your book?
So jump onto my website, kimnorthwood.com. that has all the details about the book and where you can buy it. You can follow me on Instagram as well. Got Kim Northwood Finance Guy on Instagram. And yeah, please, if anyone wants to get in touch, please do so.
Well, thank you so much for your time, Kim. Have a great rest of the day, man.
Thank you very much. Thanks for having me.